afternoon from Los Angeles and happy Friday. It's Alyssa Quorum and Ken Shreve with a look at the stock market today. On today's show, we're breaking down the chart action of Microsoft, Zoom Video, MongoDB, and more. But first, let's break down the action for the major indexes. I think it's safe to say that the rally is strengthening here, Ken.
Yeah, I would say so. I mean, a great day of outperformance for the Nasdaq Composite at last check, up about 1.7%. And we had volume was tracking higher for a good part of the session. It still is tracking higher, but volume has faded a little bit. So listen, it's a very bullish performance for the Nasdaq today. The S&P 500 and Dow up more than 1%. So we've been waiting for this for signs this market tide is going to turn positive. So I know Paul Whitfield in the big picture today is going to have extensive market analysis and about really what this big percentage gain for the Nasdaq means today. That's right. So make sure you head to investors.com to check out the big picture, and we'll tell you more details about our podcast later, but we also have insights about this vertical violation that we've seen, how to spot distribution days, what all of that means. So the podcast episode this week also has details for everyone as well. But let's talk about a few individual names, starting with Microsoft. A nice move today for the trillion-dollar market cap company. A strong gain today, breaking out of a base here. So what do you make of the move today for Microsoft? Well, one of many strong movers in the Dow Jones today. Microsoft, Apple, another strong gainer. But this is just a nice solid breakout for Microsoft. They got a pretty clear, identifiable buy point of 131.47. So, you know, when you start to see the market start, improve, and again, seeing signs that the market tide is starting to flow positive, you do want to see good technical breakouts. So Microsoft is a good solid breakout today in higher volume, and it's still in buy range. Yeah, and we were showing you the chart of the Nasdaq still there, which Microsoft does mirror a little bit, but you can see this pretty tight base here, a depth of only 9%, briefly falling below the 50-day line, but retaking that level really quickly, and seeing the relative strength line hitting a new high as the stock breaks out. That's, of course, a very positive technical indicator here, but this new market rally is still pretty fresh here, so maybe approach new buys, still with maybe a little bit of skepticism. Don't just, go hog wild here. Yeah. Well, the thing is that there's still a lot of unresolved headlines in the market. Nothing really has changed regarding the potential of Mexico tariffs that are set to take effect Monday. Really, not much has changed in terms of the China trade war. We had a very weak jobs report today, but a lot of people are saying the market is rallying because it's now pretty sure it's not a question of if the Fed is going to cut rates. It looks like it's pretty likely at this point that they're going to cut at least once before the end of the year. So market likes lower interest rates. The 10-year Treasury yield getting close to 2%. I mean, it has really come under a lot of pressure. So the weak jobs report this morning was actually, good news for the stock market. Yeah. All right. Well, on the IPO front, let's check out Zoom Video. It gained over 18% today on earnings. A strong earnings report that showed top line growth over 100% and profitability here of some 400% gain or so. It's only earnings of a couple of pennies a share, but it's positive to see profitability with an IPO, because we don't see that for all IPOs. But Zoom has had a pretty strong run since going public not too long ago, and now we're seeing a base breakout for the stock. Yeah, a lot of these new issues that have been performing well, Zoom Video, Beyond Meat, there's a lot of them are showing really big sales growth in recent quarters. Some are just starting to turn profitable, like Zoom Video, but this is just another breakout today. You can see it closed in the bottom half of its range, but a very bullish gap up. It cleared an entry of 91.56. This would be just a short IPO base. So for people looking to put money to work in the market, maybe believing that this uptrend could be for real, breakouts like this are worthwhile. Again, when a stock gaps up, you'd like to see it close at least in the top half of its range. And so Zoom faded a little bit, but a nice solid move for the new issue. Yeah, that's right. It's always good to focus on stocks that are in their early stages of growth. And Ken, when you talk about a stock that closed at the top of its range for the day on a breakout, MongoDB is a great example of that. It gained about 15% today, heavy volume, and it looks like it has
all the ingredients that we like to see when a stock breaks out of a base.
Yes, technically really solid here. This is just a really nice breakout over a 154.90 buy point, and again, a close near the top of the range. The issue with MongoDB, DB, by the way, stands for database. This is a database software firm. It's not profitable yet, so this is another example of a company that's showing really good sales growth. We saw earnings earlier in the week from MongoDB, yet another quarter of accelerating sales growth. So clearly a company that's selling a lot of product. They're not profitable yet, but just a good bullish technical breakout on a day where we saw a really powerful gain for the Nasdaq. It's just what we want to see.
Yeah, well, let's contrast the moves by these three hot software sector names with that of Apple, which itself saw a pretty decent gain today, almost 3%, but it's gotten pretty beaten down in this recent downdraft, so the chart is still looking pretty damaged even with a relatively strong day for this big cap name.
Yeah, really Apple, along with all the other FANG stocks, Facebook, Netflix, Alphabet. The FANG stocks, I'm not really sure it's an area where you want to be in the market right now. There's a lot of stocks still showing that they can lead the market, not the FANG so much. Apple up again today, but you can see battling at its 200-day moving average. That's the dark line in the chart, and it's still below its 50-day moving average, which is right around 194. So the story with Apple, yes, it's rallying off lows, but it still has what we call overhead supply to work through as it continues higher. And again, that 50-day moving average around 194 could be a resistance level still. So this chart looks very similar to a lot of the other FANG stocks right now, rallying, but some technical damage done that's going to probably take some time to repair.
Yeah, that's right. I think at one time people thought that Apple was going to be the leader as far as, the $1 trillion market cap conversation, but seeing Microsoft now at that level as it's holding strong, breaking out to new highs, you can definitely see the difference between those two charts here.
Yeah, exactly. And the bottom line is when you're starting to see a market that is showing improved technical health, and you don't want to look at stocks that have been beaten down and rallying off lows. You want to look at stocks that are near highs, making a case for a breakout. I mean, there's so many on the homepage of investors.com right now. There are so many stock ideas out there, potential leader stocks that are showing technical strength. The FANG stocks are not showing technical strength right now, but a lot of other growth stocks are, so it's very encouraging.
Yeah, I think that's a good point to make, to prioritize a big part of the factors for looking at a stock, that healthy chart action versus just purely the name like Apple and maybe long-term potential, but that's not enough to help you know that the odds will be more in your favor if the stock is already heading in the right direction.
Yeah, it's really just a matter of looking at the quality merchandise in the stock market. It's always served up in the early stages of a new rally, and you just want to be careful of stocks that have been really hit hard by selling. Again, the FANG stocks are a good example. They're still far off highs. They still have overhead supply to work through. So it's going to be
potential resistance at the moving averages.
Yeah, and resistance as well. But again, the names that we discussed today, my sector leaders column that just posted is just again kind of talking about all these software stocks that are finding support at the 10-week moving average. It's still a sector that could provide some leadership here. So things looking pretty good. But like I said, we still have some challenging headlines for the market to overcome, and
very true.
Maybe some whipsaw action more to come, but certainly encouraged by a nice day for the Nasdaq today.
Exactly. Well, as Ken mentioned, make sure you check out the big picture today, as well as all of our articles that will be featured in this week's IBD Weekly, out on the web and on newsstands. So make sure you check that out, as well as our podcast. You can go to investors.com/podcast for the latest Investing with IBD episode. And on that note, we hope you have a very great weekend.